Usdjpy is bullish and Shabby FSO, we've done a previous analysis on UJ and while we're looking back at UJ again to see a potential opportunity to see if we have more room for correction or will price continue. But looking at the structure on weekly time frame, we'll find that we have a floor that's been updated, an ascending trend line from February 2022. Price updated it in December 2022 and returned in April 2023 and updated it again in December 2023. And we had a breakup of the structure and price came to tested in October, dropped the structure and returned back. Now you see the structure is broken, a broken supply roof, returned back to demand. And by virtue of what price has done is to update this roof. It's an outright swing. We had a chat on this before, but it seems like we didn't meet the intention of this market. Having looked at it critically, I shall be a first one. We continue to look at market and think of possible things that price want to do. This is what I see. The reason is because there's already a sell liquidity build up at this level. So it makes a whole lot of sense to break out of that structure and take away all the buys at this level. You can see the buys at this level. Look at the break of structure at this level. You see the break of structure at this level. So it makes sense to see that the entire cell is taking out to update a new cell. So this is how I want to see it. This is how I want to see it. The idea is to sell from the break of the previous high and buy from the break of the previous low. That is the strategy. So because at the end of the day, this thing sometimes requires a lot of technical application. So we want to see if it is possible that we are going to break out from this middle ascending supply roof. So a breakout from this, the liquidity however will build up at this level and we see price return back to buying foundation. So what we mean by buying foundation is you look at what price have gone from this trend line, it's a buy, from this trend line, it's a buy, from this trend line, it's a buy. Now we have a breakout retest and price returns again, it swings again. So this is what we see. And when we look at the structure again, we see that at this level we have had a strong retest that resulted to upswing, creating a demand structure. So look at the structure. So we have here a structure at this level. So look at the structure at this level. So weekly time frame, it's always good to stay on weekly time frame. Weekly time frame gives a very clear bias as to what the monthly might likely do. So we're looking at this structure to see if this breakouts from this structure because you can see the retest, the weekly candle. The weekly candle is not over yet, but we want to see if it is possible that price will continue to upswing. The possibility is also in the structure on weekly time frame. We have here the support floor. So if we take this from this resistance structure, break out of resistance structure and retest, and the price return back. That is break of the demand floor. Price returns into respect the broken demand floor, returns the supply roof, and break out of the supply roof. So at this level we stay, we are safe and we are good at this level. So you see, uncritically, if you take a sell here, you are right. You are right in the sense that we have a breakout from an ascending trend line from 2022 March. Price retested January 2023, came back retested March 2023, returned Monday, December 2023, breakout of structure in August 2024, and price came back and retested on multiple times, very strong bearish candle in the month of November, and price rallied again That rally was not a coincidence. The rally was based on structure as well. And we have also detailed why price dropped at this level. The reason is also very clear in the structure of the market. We have here, look at the structure at this level. We have here clean break and retest. So there are many ways we can always use to catch the structure of the market, regardless of how the market will play, no matter how it is played. All the strategies to catch it. And let's look at the structure again and see what price has done. Updating from April, we change the color code to black. So we have here a breakout structure, price returns on demand. So price returns here on demand, price returns here on demand, price return here respected the break of the demand floor, we tested it as a supply week. And return respected the supply week, break of the supply week, price returns here on demand. And now we have broken a structure. So we are trading higher, and this time maybe price will come down, use this foundation and move higher. So in technical, UJ might print higher. It's just very much possible that UJ might print higher. But however, we have a stoppage at July price action. July price action at 161. We will save that date. So save that date that there's a likelihood that we're going to have a bearish cross at this level. There's going to be a likelihood that there will be bearish cross at 61, 62 level, which also coincide with our previous analysis. So we are doing multiple charts in order to see if we are going to have some deviation from the previous chart. So if you find any deviation, you feel free to bring it to the desk where every knowledge counts. So feel free to criticize our analysis, feel free to tell me what we are not doing right. Feel free to tell me that we are doing nonsense and tell us the right thing to do so we can add to what we are doing. But the best we know that market structure is undefeated. We have tried it on a couple of things, stocks, commodities, crypto. Market structure is undefeated. It can never be defeated. And when market structure joins with fundamental analysis, it gives you a clear directional bias. So at this stage now, I think UJ is ready. UJ is ready. UJ is ready after that swing from that bearish September drop. UJ is ready to see if it will test 62, 60 level. It will continue to go. Price have returned to the buying floor. You can see the buying floor, buying floor, buying floor. So price returns to buying floor is welcomed by other buyers. So the moment buyers have seen price at this level, they will bring out their money and bet on UJ that American economy will outshine Japanese yen every way you can think. So break of 162, 160 level, we further use that roof, a broken the broken supply roof as a demand and price will now go higher, where we look at a potential opportunity for sell at an institutional sell trend line. Why did I call it institutional trend sell line? We have here as a demand floor, we have here another demand floor, we have here break of structure and a retest. You can see break of the demand floor, retest as a supply roof. Then the sentiment changed from sell to supply, from buy to supply, we sell from here, and price return here again we sell, and another return at this level price sell, and this is an institutional trend line. Sorry to tell you, it's an institutional trend line. It's an institutional trend line. It's not for retail traders, it's for the big boys. They stay here and short, they stay here and short, they stay here and short. So that is what it is. So what we see here is price will come back here where we wait the big boys again. Bank of Japan changed their monetary policy again to swipe the market outright. I think this time the market will go to clear out all the sell liquidity because it usually sell liquidity on this trend line. And the trend line started running from 2022. That is over 2 years now. So what I see market will do is to pick out all the sell liquidity and come to the test and new zone. And the reason we are doing that is because you see when we clone our floor, let's take this out and so that we can get our facts correct as to what price will do next. This is our floor. This is a consistent floor. Take it to the current high. This is where price will move now. So look at the price movement. The price movement, look at the volume of the price movement. So this volume of the price movement, market is in replica. So it's going to replicate the same distance. If you replicate the same distance after price returning to the demand floor, where it's also consistent with buying. So look at the demand floor. buy one, buy two, buy three, buy four. These are institutional trades. They are not retail trades. They are institutional trades. Institution buy here, institution buy here, institution buy here. They buy and go home. They buy and go home. And when they got to the roof, they saw the structure. Then try to play with the emotion of retail traders, knowing fully well that they are going to be stopped here by this price action. This place is a very strong break and retail structure. It's also an institutional structure. So in this case, what I see price will do is that they will now come down here, and when they come to this level, there's no need to come down again. So the price will come down here, retest 162, 160 level, and go back, ultimately sell from this roof. Of course, Bank of Japan can always twist their monetary policy at any time to strengthen yen. So it's not a new thing. We've seen them do it so many times. So when they accumulate, boom, they distribute it. So it's part of the strategy of BOJ. It's part of their strategy. And it works well for the Japanese economy. It works very well for them. The export market is doing well. The next we're going to look at is a Japanese 10-year bond yield, Japanese 30-year bond yield. We're going to look at it to see how it's going and know when exactly we are going to short UG. Because when we get an inverse relationship between the both yields, then we know it's time to short UJ. But for now, I think USD JPY will continue the bullish pedestal. That is what Shabby FSF see. Feel free to criticize analysis. Feel free, feel free, feel free, feel free. It's an educational series. Everything here is free. There's nothing you can do. You're just doing it to help one another.